Welcome to 40 years of real estate investing, thriving in the ups and downs. It's presented by Overland Capital. So my name is Michael Holman, and I will be your host today. And we also got Ken Holman with us today. We'll introduce him shortly, but we are excited to drill him on all things of his real estate investing career and life.
That sounds a little broad.
Well, we're gonna get into it, I promise. So we'll see. We might make Ken squirm a little bit with some of the questions we ask, but I'm sure we'll see how he handles it. Oh, so for anyone who's new, hasn't been to one of our webinars before, Overland Capital is part of the Overland Group family, which is a fully integrated real estate organization. We've been around for about just over 40 or 30 years now. Really the goal of Overland Capital is we're trying to provide investors with a better investing experience, right? And we believe that a really big part of that is helping people who have invested or haven't invested in commercial real estate the opportunity to learn and understand and invest in commercial real estate, right? And we've all heard the phrase 100 times, invest in what you know. And if you've been on before, you've heard me say it time and time again, commercial real estate is no different. The more you know, the better investor you'll be. We're also going to do, in addition to the Q&A that I'm about to grill Ken with, feel free to ask questions throughout the presentation yourself, and we'll do our best to answer all those questions at the end. For anyone who needs help locating the Q&A button, it's located at the bottom of your screen. Also, you'll be emailed a copy of this presentation, but you can also view it on our website at Overland Capital Corp, that's corp.com, and clicking on the education tab. So a little bit about me. I run the investments and finance divisions of Overland Group. So what that means is I spend a significant amount of my time working with equity partners and lenders. I'm also a licensed CPA. As I mentioned earlier, we have Ken Holman with us today. And just a little bit of background on Ken. Ken is the president of Overland Group and has over 40 years of real estate investing experience. He has developed over $350 million worth of commercial real estate, and he also holds just about really every top designation you can get in the real estate world. You can see all those little designations right there at the bottom of his screen. So I'm going to go ahead and turn it over to Ken just to introduce himself a little bit before we get into the questions. Ken?
Well, thanks, Mike. I get a little nervous when somebody says they're going to grill me, but I guess I'm considered the senior member of our group, and I'm pretty excited to be with everybody today. Both Mike and I have degrees in accounting. Don't hold that against us. He has a master's in accounting. I have a master's in business administration, but we really enjoy this business, and we're excited that you could join us today.
Perfect. Thank you. So, as we kind of mentioned, the topic today, 40 years of real estate investing. So we're going to go over with Ken, we're going to go over the ups, we're going to go over the downs. We're going to try and ask him for some advice, see what he's done, because he's really been through a lot with these. So we're going to do things a little bit differently today. I mean, to be honest, the whole world's kind of turned upside down and doing things a little different today. So why not? We figured we'll do something different as well. So what we're going to do is we're going to spend the majority of our time today doing some Q&A with Ken. And we're going to get into the good, we're going to get into the bad, we're going to get into the ugly of 40 plus years of experience he's had in commercial real estate investing. So let's get right into it. First question, we're gonna start with some lowball questions, Ken. So tell us, what's your experience in commercial real estate or CRE investing?
Oh my gosh, why don't we start with something a little broad? That's like, how are you doing? It's a whole bunch of range of answers you could give there, but
hey, don't worry, we'll get more specific here.
Well, I guess I started out in the real estate syndication and financial planning business right out of school. I got hired by a fairly high-powered firm, and they they kind of put me through the paces, and I gravitated to real estate. They were doing a lot of real estate investing at the time, and eventually they asked me to manage a property management company. So we were managing over 5,000 units in 5 different states. It was a great time, but I was also on an investment analysis and acquisition team, and they started to get a little too aggressive with their projections for me. So made me uncomfortable, and I turned in my resignation and uh, went out, bought a new suit, started my own company the same week. So it
Oh,
was
that's
a
awesome.
interesting beginning to a career.
Yeah, that's great. It sounds like that should be a movie, right? Just buy a new suit and start your own company. That's awesome.
Buy a new suit, go put a lease on an office property, and get started. Yep.
That's great. So, kind of moving on to the next question, as a follow up to that. So, I mean, obviously you've invested in a lot of things. You've been around. I'm sure you've seen a lot happening. Really, what is your favorite thing about investing in commercial real estate?
Oh man, I've I've acquired and invested in virtually every major property type, office, industrial, retail, uh, apartments, and hotels, all of them. And I think the thing that's most exciting about this business for me is I love the real estate development and construction side of the business. I love being able to analyze a piece of land and acquire it, and then create something new that's really kind of exciting for people. I think there's nothing greater than being able to see something come to life, and then see the value begin to be created by it as people rent it up, and then I don't know, I just like to see investors create wealth. I think that's a great program. So
Awesome. No, that's good to know. I'll say that I have a similar feel. I get really excited with everyone. So I definitely can relate to you. There's kind of this like group mentality when you invest in commercial real estate, right? I mean, everybody wants to see it succeed. So it's fun to be a
yeah,
part of that. That's good. I'm okay. Let's go to the next question. We'll give you a chance to brag about yourself for just a second. So, have you ever had a home run deal? And if so, tell us about it. What did it look like?
I wonder what you, maybe I need to make you define what home run is. It is this with a plastic bat and a wiffle ball, or is this really a
we're
real
talking about the
bat
big
hitting it
leagues
over the
here.
ground? Okay.
Yeah, we're talking about the majors. No, I mean, just in your mind, really, what's one of the best deals that you feel like you've ever done?
Uh, well, I've had a couple, maybe more than a couple, but I remember with the first big apartment deal that I put under contract, I had a large investment company come to me and say they'd pay me several $100,000 more than I was going to pay for the property. And at the time, I thought, well, I'm not even sure how I'm going to get all the equity capital raised. I don't mind flipping this deal, and so I did in a
That was
matter of a couple.
convenient.
It was awesome. In a matter of a couple of weeks, I walked out with a couple $100,000 more than I had to start with, and I thought, this is fun. How do I do this again? So yeah, that was a good deal.
Cool.
Probably one of my best deals that I ever did was a new development, a 96 unit high rise apartment project that I built in downtown Salt Lake. Took us several years for us to get it where it needed to be, but in the end, we'd built the project for $5 million, which is amazing in today's terms,
Yeah,
but
it's 96, a high rise 96 units. I just got to clarify. That's not
all
that
concrete
you meant to say
and
that, right?
steel.
$5 million?
I did,
Oh
and
my
that's
gosh.
exactly what it was,
You really
including
have been doing this for
land and
40
the
years,
building.
haven't you?
Uh, yeah, exactly. But anyway, and then we eventually converted it to condominiums and sold it for a multiple of almost 4 times that amount, which was kind of cool. But
Wow.
I still feel a little sorry that we sold that deal. But
Wait,
anyway,
really? You're gonna have to explain that one to me because that sounds like a pretty sweet deal. So
it
talk
was
to
a
me.
sweet deal.
Why are you sorry you didn't keep it?
One thing that I've learned over time with real estate is it just keeps getting better and better over time if you maintain it. If you don't, then it'll deteriorate. But if you maintain it and keep it up, the rents go up, the operating expenses go up some, but not as fast as the rents, and you pay your debt down. I mean, if I had that property today, I'd be clocking 50,000 a month in revenue, no debt. So anyway, it's just, yeah, obviously if you make 17 or 18 million dollars, you can't feel bad about that. You end up getting a lot of money, but it's just real estate is such a good long-term investment.
Good. That's good to know. Um, so moving on. I mean, obviously, there's a lot happening today, right? I mean, the economic
Yeah,
environment
there sure is.
is felt pretty volatile. We've been kind of going through ups. We've been going through downs. So how many economic downturns have you been through?
Oh, let's see. Well, obviously I've been through two majors. When they did the 1986 Tax Reform Act, that was a major economic downturn. That was in the mid 1980s, and gosh, I'll bet there was about 2,000 uh, financial institutions, and I mean big financial institutions.
2000?
2,000 out of about
Wow.
6,000 or so actually went down. Yeah, and there was a ton of properties that were foreclosed on. The government created what was called the Resolution Trust Corp, and affectionately known by most of us as the RTC, and so they kind of managed the whole downturn. That was a big one. The other big one was this one that they called the Great Depression. Everybody gives me a hard time because I keep wanting to call it the Great Recession, but that was
Whoa,
in
whoa.
1929. That was a little before my time. But
Wait. So okay. So the Great Recession, right? I mean, that seems like an obvious to me. You said the Great Depression there for a second, and I
yeah,
thought I should have switched this to. I might have need to switch this title to 90 years of commercial real estate
yeah,
investing.
no, 100 years of commercial real estate investing would
We
be
have Ken
more
Holman with
accurate.
us today. He's 140 years old.
Yeah,
Everybody.
no.
No. So just to clarify, we are talking about the Great Recession, correct?
Well, yes, that's exactly what we're talking about. Not the
Okay.
depression.
Just make it
We
just clarifying.
none of us are living on oatmeal today, so uh, it's a great recession. But that was more related to homes than it was the commercial real estate. Although it did impact commercial real estate a little bit, we own several properties, and it didn't really impact us that much. But it sure did the home business, the home market at that time. So those
Interesting.
are
Wait,
probably
so
the two that I've lived through that I've seen. And the thing that I noticed about both of them, there was a ton of opportunities that happened after those two big economic downturns. So
oh yeah. Oh yeah, I bet. So I got two follow-up questions to that. I mean, one, it sounds like you had a lot of foreclosures, a lot of I mean, it sounds like it was almost common practice during the Tax Reform Act days. You said 2000, correct me if I'm wrong, 2000 financial institutions went down. I mean,
Yeah.
tell me, I'm interested in a little bit more about that. I mean, how did you survive? I mean, did you have properties that got foreclosed on? Is these financial institutions went out of business? I mean, I'm interested to see what happened. I mean, how are you still here today then if you went through that?
Yeah, it was really interesting. I I never thought I would outlast companies like American Savings and Loan, which was a $50 billion organization. And here I am, and they are no longer. But uh, talking about Broadway Tower, which is that project that I felt like I hit a home run with. We started that in 1984, and we honestly thought that in 1986 uh, we were going to get foreclosed on. And so I went to the savings and loan that I was working with and worked out a forbearance, and then from there we were able to get refinance a property with a HUD 223F loan, and we just worked our way through it. And that's sometimes what you have to do. I don't see that happening in this current economic downturn. I don't think we're going to get to that point. I'll be shocked if we do. But the thing that I've noticed about this recession, which I think is happening compared to some
Yeah, I
of
was
the
gonna say
others,
those are big words right there.
yeah, compared to some of the other situations that we've had, I just see everybody working together. The federal government, the state, the financial institutions, uh, we're all just working together. I've been amazed at how helpful they have been with the properties that we've had. We, I don't want to say this, but some of our projects have actually done better during this time. So
Yeah, that's yeah, it's interesting. Well, I got another follow-up question too. I mean, you had mentioned during the Great Recession you didn't feel really the full impacts of that. I mean, that was that was major for a
that was major.
significant number of people. I mean, just talk to me and kind of what you did. I mean, I can't imagine it not affecting you. I mean, you'd
Well,
have
here's
to do
how.
something, right? I mean,
Yeah,
tell
so it
tell me what
started in
happened.
2007 to 2011, right? But it was mainly uh, and I don't want to get political, but Congress put a lot of pressure on the financial institutions to lend money, and sometimes there wasn't a lot of pre-qualification to be able to get that to buy homes, and then so everybody thought it was a great idea to over leverage. I refused to get into that game, and so I wasn't trying to buy a high home inventory at the time, and leverage the heck out of it and then rent it out. And so people went through that process, and then we had the subprime mortgage debacle that occurred, and it took down a ton of homes. Almost every home that was over leveraged had a problem. And so I'm a huge advocate of not over leveraging your investment, even
Yeah, I
though
was
you
gonna.
think you can get high returns. And what we did during that time is we just pivoted. We had apartments, they did pretty well, especially with people that wound up getting foreclosed on. They had to move somewhere, and usually they moved into apartments. And so our apartments did well, and we got into dollar store investing. So Family Dollar, Dollar Tree, Dollar General, Big Lots, Walgreens, O'Reilly Auto Parts, just a ton of them, AutoZone. And we bought buildings with national credit tenants, and we just sit there and collected our lease payments every month, and didn't have a problem during that time. So
Yeah, that's interesting. I mean, that's what I see with most successful companies, right? I mean, is they manage to to pivot. So that's
Yeah, you
that's
have to.
really,
There are times when you have to do that, but
yeah.
you want to stay in solid asset classes too, so that
No, that's good. I like that advice.
they
So
do well.
staying conservative and being willing to pivot is needed. No, that's great advice. So let's keep going on to our next question. So, and that's kind of a follow up to the last one. So, I mean, really, in your opinion, and in your experience, how does commercial real estate investing change in economic downturns versus economic booms? I mean, you kind of talked about pivoting. Maybe you can elaborate some more on that and the differences between downturns and booms.
Well, I guess that what happens is you ought to just look at the economy the way it sits today. What what industries are doing well and what industries aren't doing well. And those industries that are doing well are really thriving. And those industries that aren't doing well are really struggling and will for some time before they come back. So uh, uh, things like apartments seem to be pretty stable and they seem to be doing well. Uh, some offices may be struggling with, everybody working from home, and maybe they get the idea that that's a great idea, and so the need for office space might decline. I know that the distribution business, uh, with all of the online purchasing, is just going nuts, and I have a feeling that manufacturing is going to be coming back pretty strong, uh, since China makes all our medications and drugs that we rely on. I have a feeling somebody's going to have a big conversation about getting the manufacturing sector up and running. So I think that's just the name of the game, is just you have to change with the times, and when the markets are really doing well, there's other opportunities and other types of real estate investments. So
I think that's really important. I mean, those are some actually really good points. I mean, I feel like some of the times when you have the really big companies, I mean, just kind of go off of that um, and agree with what you're saying. I mean, sometimes you have these big companies that are investing in real estate or really anything else, and they're not capable of changing. They're not capable of pivoting with the market as needed, and it brings them to their knees. So that's
yeah,
a really good point. I think that's some good advice. Is
yeah,
being able to
sometimes you
pivot.
hear this term too big to fail, but you know, uh, sometimes if you're a little smaller, you're too small to fail, which is nice. You haven't, you
I'm gonna
haven't
coin that
over,
term, too small to fail.
yeah, you haven't over leveraged your deals, and you just get good, solid investments, and they don't all have to be in the same product type, and you can weather storms. So
All right, so let's move on. And I told you we're gonna put you in the spot a little bit. So we gave you the opportunity to tell us about you know one of your home run deals. I want to hear about now one of your worst deals. So tell me your worst or one of your worst deals you've ever done.
oh my gosh, Mike, uh, you want me to air my dirty laundry here in front of everybody? So
Absolutely. So, I mean, we're trying to make this as real as possible for everybody who's on, and it's easy to flaunt all the good stuff, right? But I mean, I feel like you can't. There's no way you can be in this business for 40 years and not have a couple of issues. So I wanna hear about those.
yeah, well, uh, back during the RTC days in the 1980s, we all struggled with some properties, and some bigger companies went down. But I'm trying to think, in the last 30 years, I've had some properties that have struggled for a period of time, and then done well. But I guess there was a time when, about 25 or 30 years ago, when me and three Arizona guys decided it was a good idea to buy the Jack in the Box franchise for the state of Utah from a company called Food Maker, and we committed to build out. We each put up 125,000 and committed to build out the market uh, in Utah. And we got started and built our first three. And every time we built a new one, they looked gorgeous. They were wonderful properties, and we were just elated with them. And we opened them up, uh, and then we'd lose 5,000 a month. And it was like, well, after you built three of those and you're losing 15,000 a month, it's like, this is fun, but it's really not all that much fun. And so, so gosh, we went back to Food Maker and said, okay, we got some problems here, and we were performing well. We were at the very top of the performance situation with they'd come in and do surprise audits, and we were performing better than anybody in the entire LA market, which is their stronghold. And but we discovered, and this is a thing that relates more to real estate than the restaurant business, we discovered that we had missed our projections, and we started delving into that as to why, and discovered that the franchise disclosure document that we had been given had shown that all the stores were receiving advertising dollars from Food Maker, and we were not. And so we went back to the company and said, hey, you got to give us advertising. And they did. For 1 month, they put in $50,000 and our sales shot up. And we said, hey, this is cool. Keep it up. And they said, no, we're not going to do that. And so we said, okay, buy us out. And at first they said, no, we're not going to do that. But we had a really good attorney that happened to persuade them otherwise. And eventually they bought all our stock and inventory and everything, and gave us our money back. And so we still lost some money and a couple of years worth of effort and time, but in the end we were just left with three building leases that we had to release. So I guess that's, if you're talking about failures, that was a bad one. But
so that was really good. Nobody likes to lose money on a deal. To me, that felt more like the restaurant business than the real estate business, though. So is there maybe you can go into another deal that's specific to real estate or commercial real estate?
well, let me say this: every piece of real estate is nothing more than a vacant building if it doesn't have a business in it. And so there is basically a business in every building. Even in apartments, I mean, the business is property management. You're renting apartment units to tenants who want to live there, and they're willing to pay money for that experience. And so I guess what I could say is, whether it's the restaurant business, the apartment business, the office business, the hotel business, there is always a business associated with what you're doing. And you have to make sure, one of the keys is you have to make sure that the fundamentals are right, the management is right, and the tenant is right in order to make that deal a home run. Otherwise, it's just not. So,
All right. You've convinced me. So I'll give you a pass
that
from
may be a
airing any more
first,
of that
Mike.
dirty laundry. No, that was a good point, though. That's not something that I had really considered where I was going, but that is a really good point. I mean, you're exactly right. Every real estate transaction is. I mean, I'm trying to. The whole time you were saying that, I was trying to think if I could prove you wrong, and think of a real estate transaction that wasn't tied to another, business transaction.
Yeah.
And to be honest, I mean, you might, it's
Some are
that
easier
it
or
can't
harder
happen.
to manage than others. I mean, you do a triple net lease, that's a pretty simple deal for you because all you do is collect the rent and rely on that tenant to pay the rent. But
Yeah, I mean, no, I mean, that was actually, so just thinking about it, just barely. I mean, because I was thinking about the triple net leases too. We have a few,
yeah,
and there was just earlier this month, or it was the end of last month. I got a letter from one of our retail tenants that said, not paying my rent next month.
yeah,
Sorry, and and obviously we're working through that and doing our best to deal with everything, but that actually
yeah,
was a business that affected the real estate behind it. I mean, so that's a good point. You're right. So
yeah.
I'll all right, we'll stick with the Jack in boxes and losing $5,000 a month. You said so. Were you only
Per
committed to build three? You had said you
no,
were committed to
we
build
were
out the
going to build
market. Was that?
24 of these things,
Oh my gosh.
but when we started losing 15,000 a month, uh, we weren't sure if we were losing 5,000 per store every time we opened a new store. We were going to make it up on volume. So
Well, by my calculation, you just needed to build out all 24 of those stores. You could have lost probably
yeah, there
close
you
to
go.
125,000
Yeah, no
a month.
kidding.
That'd have been
I don't
awesome.
think we would have lasted that long at that rate. So
Oh, that's great. All right, well, we'll move on. Good to know, right? I mean, there's good and there's bad in real estate, and
yeah,
sometimes you got to deal with it.
just like every other investment. So
Exactly. So moving on to the next question, what's your advice um, to commercial real estate investors during volatile economic times? I mean, if you were maybe you were thinking about investing in commercial real estate and you're saying, well, I don't know right now. I mean, is your advice to wait? Is your advice to just plow on? I mean, what advice would you give to people who are, I mean, this is one of their main things that they're trying to do to build wealth for the future. What do they do during these times?
uh, well, to be honest with you, I take a little bit of the Warren Buffett approach to life. Uh, Buy when everybody's selling and sell when everybody's buying. And so during this pause that we've had for the last, what, 30 to 45 days while we're going
Yeah,
through
roughly.
this, I have been canvassing every market that I have targeted, and I've targeted about 15 of them that I really like, and I have been looking for opportunities. And uh, I'm not ready to announce what I've got yet, but I have to say I've got a deal that I'm making an offer on today that I absolutely love. Uh, the uh, the developer was a small developer, uh, hadn't been in the apartment business and got over his skis a little bit, and I'm getting a deal that is appraised for more than $1 million more than it's going to cost me to buy. So I think there are some opportunities in these times, but whether they're good times or tough times, I think the cardinal rules have to be: don't over leverage, uh,
Hmm.
be careful of the types of investments that you get in. You always want to have a margin of safety on the equity side. And then you have to have a reasonable cash reserve. You don't have to go crazy with that because it really messes up your returns. But you have to be able to weather at least a mild storm. So
Yeah, no, those are definitely, it's good advice and interesting. I mean, that's cool about the offer. So
yeah,
I have a follow up question to that, and you almost answered it in your last one, but I'm gonna ask it now. So, I mean, what kind of commercial real estate have you invested in during times like these, and succeeded? If there, I mean, if there's any, I mean, I'm just as interested if there's not any times that you've succeeded, but yeah, what kind of commercial real estate do you invest in?
Well, uh, I guess number one, the rule location, 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 which is overused, is always important. So whatever real estate you get into, you want to do your best to get a good location. But barring that, I have found that apartments tend to be really good investments. I found that triple net leases, even though you got to be really careful with the retail business, if you get in the right locations, you can do well with a triple net lease situation. Uh, I haven't done much lately with industrial, but boy, the it's sure tugging on me to try to want to get into that side of the business. But we're in self storage, and I think as long as you get well located properties on high traffic streets, you can probably do fairly well with self storage. Although, I can make cases both pro and con of self storage or some of these others, but frankly, I really like apartments.
Cool, good to know. So if I were to boil it down, right, and make this really clear for everybody, are you saying right now your go-to, or in volatile times, your go-to investment would be apartments? Is that fair to say?
That is fair to say. But let me qualify that a little bit. Since there's so much interest in apartments, I have noticed that, everybody wants to use the term value add, and they always want to find an apartment project that somebody hasn't taken care of, and they're able to buy it at a low price, go in, do cosmetic fix-ups, turn around, hold it for a while, get it leased up, and then sell it for this huge profit. I mean, that there's still some opportunities out there for that, but you run across a lot of issues with that too. I mean, you're buying older properties, you wind up inheriting a certain amount of functional obsolescence, which means, ceiling height may be different. They may or may not have garages. They may have amenities or not amenities. I mean, there's a range of issues that can arise, but so I love, if you're in a situation where demand exceeds supply, I love building new apartment developments.
Okay.
You have to be patient through that process, but you create a ton of value when you can build at cost, and then everybody wants to buy at market because you've stabilized it and rented it up. So yeah, so that's probably my go-to.
Okay, good to know. So we're gonna keep this moving because we already have some questions coming up, and I want to make sure that we get to answer it. So I had to ask, you've had a lot of commercial real estate investing, um, and it seems like everybody has a story or two. So have you had any just weird or crazy experiences?
Uh, well, I've uh, I've had a few crazy experiences, uh, some that relate to real estate and some that don't. I I talked my 8-year-old brother one time to take off all his clothes and run around the house, and he did it, and I locked him out of the house. I thought it was a lot more funny than he
Yeah.
did, but so that was a crazy experience, but really
Okay.
didn't relate to real estate. So,
Uh, well, is Okay.
All
Okay.
right.
That is not what I was expecting. So if you have another, do you have any related to
Oh, let
real
me
estate?
think.
I mean, if not, that's
Yeah.
okay. We'll move on. We can end with everybody having the image of your 8-year-old brother running outside naked of his house.
you, you might end there, but
And we're
so
done, guys. Everybody can go home. That's all you need to know from us. No, I'm just kidding. I'm just
okay,
kidding.
I do have a funny experience that happened. So I was down doing a due diligence inspection on an apartment project in Houston, Texas that we were going to buy. And for anybody that knows Texas, it's the wild, wild west. They don't even have any zoning laws down there, so you can pretty much build whatever you want where you want. But uh, anyway, I was doing this inspection with the manager and going around to every apartment unit. And I noticed in the background, way down at the other end of the complex, that there was this lady leading a horse. And I thought, well, I wonder if there's a corral back here where she's keeping that. So we went and explored and discovered that she was boarding her horse in the second bedroom of her apartment.
What?
I'd never seen anything quite like that before.
No, no, no. She was boarding her horse
She absolutely, I mean,
in the unit.
there were ground level units, and for some reason, she thought it was a good idea to buy a horse and board it in the second bedroom. And I was,
Was it a miniature horse?
no, this was a full size, honest to goodness horse. And I thought, oh my gosh, that said a lot about the manager. How do you miss a horse, on your project? And so the other neighbors around her were just keeping quiet about it, but it was crazy.
I have
We
so
went in
many
there and
questions.
oh my gosh, honestly, it smelled like a barn. And so in the end, needless to say, I did buy the project, but
Okay, that was
but
going to be my next question.
I did. I bought the project. Uh, I did fire the manager because I felt like if she couldn't catch a horse on her property, there was maybe some issues, and I changed the pet policy. Nothing under 1,000 pounds. Yeah. So anyway, it
Oh
was
my
it
gosh,
was
that
pretty hilarious. But now I'm a little concerned because you mentioned a miniature horse. Oh my gosh, I was watching the news the other day, and the FAA just cleared a miniature horse as a service animal and permitted them to fly on a commercial airline. And I thought, oh my gosh,
oh, that's funny.
what's the world coming to? But
That's funny. No
so that
disrespect to anybody out
I
there who
know,
has a miniature horse
yeah,
who
no,
needs to take it on an airline.
yeah,
Okay.
but I am interested how it's working out for you if you're keeping it in your bedroom.
Yeah.
So
Yeah, that's going to be one of the questions. Make sure that you type in the question if you do bring miniature horses on airlines. We want to know. That's hilarious. That is crazy. Okay, I was not expecting that, but so let's keep this going. So what's one commercial real estate investing mistake that you've made and that you would tell others to avoid?
let's see. Well, I mentioned a little while ago about self-storage, and sometimes you get in your mind that every property type is like every other property type, and you bring your education, experience, and influence to that new property type you want to get into. So I thought self-storage was just like apartments, and you build it, they will come. And I discovered that traffic plays a critical role in self-storage. You've got to have good prospective drive-by renters coming by your place. Otherwise, you spend a fortune on online advertising just to drive the business to it. So I guess one thing that I would suggest to everybody is if you don't know that product type or that property type that you want to invest in, you better read a ton of information on it, and you better talk to everybody you can to find out exactly what that property type is like and what the nuances are with that type of property, so you don't get yourself caught in a situation where you just think you know everything, and in reality, you find that you don't know as much as you thought you did. So,
No, that's a good point. So, good advice. So, I'm gonna. Nobody knows this. I'm gonna put a disclaimer out, but I'm gonna put you on the
oh,
spot. I'm gonna ask you to. I'm
me?
gonna ask you to take out a crystal ball, right? And you might have actually answered this based on one of your comments, but we're gonna formalize it. I want you to take out that crystal ball. Do you think we're headed for a recession? And Ken Holman's opinion, are we headed there?
Uh, well, I'm just like everybody else. It's based in part on what I read, but you have to say, with what's happened with the economy in this first quarter, that it's likely we're already in a recession, and everybody knows the definition. There are two consecutive quarters of GDP falling, declining. So uh, there's not much question in my mind that, from a technical standpoint, uh, we're in a recession, and I think the numbers for Q2 are probably maybe going to look worse than the numbers in Q1. So what we're all hoping for and counting on is that this is more of a V-shaped recession. So goes down steep, bounces back steep, and uh, it may or may not be quite that dramatic. But do I feel like this COVID-19 pandemic is going to take down commercial real estate or have a major impact on the properties that we're involved with? And I think we're going to be fine.
Hmm.
I
All right.
think it's a little little early to tell, but to me, it feels like we're going to be able to bounce back from this. So
All right. Well, I had to ask the question. Just
yeah,
just get your opinion on it. All right.
yeah. I'm
Everyone has an
not an
opinion.
economist. I'm probably the least informed person you should ask, but
Well,
I do read.
yeah, and you've been through this a few
I
times, so
have.
it's good to know. Okay.
And can I say one other thing too, Mike?
Sure.
Back in the late 1970s, a long time ago, I was working for this great company who had high-powered attorneys, MBAs, financial planners, guys like that. And they looked at the apartment market and said, we don't think that apartments are going to continue to grow like they develop like they are now. So we're gonna hunker down a little bit. And in hindsight, for a bunch of smart guys, that was the dumbest decision I've ever seen. Uh, uh, Markets will ebb and flow, but do I think that 6 months or a year from now, the market's going to be tanked and everything's going to be down, and we're not going to continue to develop and build and grow? And that's just not going to happen. We are going to continue to grow and develop, and that entrepreneurial spirit that we have is definitely not dead. So
Yeah. All right. Good, or really interesting. So let's get on to the last question before we start getting into everyone else's questions. So, what is the best advice you ever got when it in relation to commercial real estate investing?
well,
And will you share that with everyone else?
yeah, I probably better not tell any more family stories, but uh, Uh, when I started out, I was working with attorneys, financial planners, insurance agents, stockbrokers, guys like that. And I learned early on that they know nothing about real estate investing. And so, fortunately, I was able, through the School of Hard Knocks and the education that I had, and just teaching and developing and growing in the real estate business the way I have, I was kind of able to mentor myself in that regard. And I have learned so much. Over 40 years, I am more convinced today than I ever have been that real estate is one of the absolute all-time best investments anybody can have. And I shouldn't say this because stockbrokers will tell you don't put more than 5 to 15% of your investment capital into real estate. And I'm saying if you don't have about 50% of your investment capital in income producing quality real estate investments, you're doing yourself a disservice. You avoid all the volatility and you put yourself in a position where you can live out the rest of your life in comfort without worrying about the ups and downs of the stock market. But I guess
Yeah.
I guess that's a good place to close. But
Yeah, I was gonna say so is that your advice for everyone?
well, I think so. I am kind of I guess one of the best books I read doesn't even relate to real estate, and it's kind of a simple, easy little book called The Richest Man in Babylon. Almost everybody's read it,
Yeah,
by
yeah,
a
I've read
guy
it.
named George Clason. But he gave some advice that I thought was good. He said, save 10% of what you make. Uh, Make sure the investments you get in have leverage and compounding. I'm not using his words, I'm using mine. But then you make sure that when you're investing, you invest with wise people that know how to handle your money, and they're skilled at keeping it safe. And then don't expect impossible returns. Uh, just don't over leverage your investments. And I guess that would be the advice I would give to anybody, is
Yeah,
to follow those principles. They're pretty good ones.
yeah. That's overall. I think that's pretty sound advice. So we'll go ahead and that wraps up the Q&A portion with Ken and I. I don't have any questions to ask.
Hallelujah.
Yeah, we'll see how everyone else does. I'm interested to see the questions that have come up from everybody else. So we'll go ahead. Let's keep going down through this, and we can show you. Oh yeah, so we should have a few quotes. I loved this one. So this one, I just had to laugh when I saw it. So I'm sharing it with everybody else. So you have to accept the fact that sometimes you are the pigeon and sometimes you are the statue, right? I mean, that's a little bit I feel like with what we're going through and all of this. I mean, it's so many crazinesses happen, and some things are in your control, some things are out of your control. And I saw this and I had to laugh because,
That may be worse than my brother's story.
well, that's, to be honest, I felt like the statue. What it made me think of is when I got that letter from one of our tenants, just basically said, I'm not paying rent. It was like, I'm the statue right now. So anyway, okay. So
I prefer myself pictured as soaring like an eagle.
oh, that's why we're asking you the questions, right? I'm the statue, you're the eagle. So all right, so let's go ahead and keep going on down to these questions. And I'm gonna go ahead and start opening them up. Can we move this forward to the next slide, please? Thank you. Oh yeah, just one other little quote. You can read that if you want, and let's keep going. Perfect. So this is helping you one more time. Just make sure if you got questions, go ahead and do the question. Oh, and also one other thing too, make sure you answer the poll before you go. Really what that does, that just helps us get to know you better, and understand, your position through all of this. So if you'll go ahead and answer for that for us, that would be really helpful. And while you're answering that, we are going to go ahead and get into the questions. So, and Ken, I think for the most part, I'll let you handle these unless I have something to do.
Okay.
So, this first one comes from Zach. They asked, "How are storage units doing right now with everything that's going on?" Ken?
Okay, Zach. Good question. And I'm going to give you what I think is not the standard answer that everybody would give. I think the standard answer would be storage units are great. Everybody should be investing in storage units. That's not my answer. My answer is there in some markets is absolutely an oversupply because they're not too expensive to build. You can put them up pretty quickly. They're fairly easy to manage, and so a lot of people have bought storage units. I still like the storage unit market, but I am very particular on where we build. If we can't get into a market where demand literally exceeds supply, and we can verify that, and we're not on a major street where we're getting good traffic, I have no interest in doing storage units. So I'm very particular, but when you see one come out from us, you'll know we've done our homework on it. I am kind of interested, and it's fairly hard to find these, but it seems like where a cluster of storage units have popped up, that they all have kind of the same model, and there's very little room for boat and RV storage. And I'm interested in going into those markets that have a ton of similar storage units, and putting in something a little different that all those storage units will refer their business to us. And so I'm taking a little bit of a different approach to that, and I've got a couple other ideas that I'm working on in terms of how to differentiate ourselves in the storage unit market. But yeah, I think it's a mixed bag. I think you have to be careful where you're getting and look carefully. So
Good advice. I mean, that's good advice for any time. So,
yeah.
Okay, next question comes from NJ. They've asked two questions. So, one, have you ever had to ask for investor capital calls? And if so, what were the circumstances and what was the result of property performance?
Typically, that's not been much of an issue, but I mentioned this storage project that we're dealing with, and we've been dealing with it for about 3 years, 2.5 to 3 years, somewhere in that area. But that's probably the first project in 25 years that I've had to go after a capital call on. So I'm a little disappointed in myself, but if you have to, you better man up and do what you need to do. But I chose to take a little different route. Instead of making a capital call to the investors, I went out and asked them what they thought and how they felt about it. And I've tried to keep them apprised of where we are in the market and what we're doing and what I think ultimately the upside is. And some said, yeah, they were willing to invest. Others said, well, not so much. And so I reached out to our investment pool and uh, and uh, and got several investors that were interested in doing a higher than market interest loan. So it wasn't 12 to 15%, but it was like 8 or 9%. And I went out and was able to borrow enough money through that means, put them in a we pooled the money together through Overland Capital, put them in a second mortgage, so they've got uh, a secured interest in there. We've got a ton of equity in the project, and that seemed to have worked out pretty well so far. So that's I guess what I'm doing. So
Right. So
in terms
so
of worst real estate projects you have had, uh, I think I mentioned some of that, but hopefully I've answered that. If not, fill out the information. I can give you more details. So.
yeah, well, I want to follow up really quickly. So just for clarification, in the last 40 years of real estate investing, even if it was 35 years ago, have you had to do a capital call?
Uh, I can't think of a capital call that I've had, but that other than this one that we're thinking about, but I don't want everybody to think I've been Mr. Wonderful and I've hit every market. I mean, during the RTC days, we had some foreclosures, and there have been times that we have had projects that have struggled, but we've managed to come out on top with most of those. Back in the RTC days, there were a lot of highly leveraged assets, and the only thing that made it palatable is we had non-recourse loans. So we got a lot of tax write-offs. We made a decent return just on the tax write-offs that we were getting pre 1986, and then when the markets turned down and got ugly, we were able to just give the projects back to the banks and let them deal with the problem. Uh, but say not in the last 30 or 35 years have I had a lot of capital calls. So
Yeah, well, good to know. I had to press a little bit more. That's
yeah.
you know me right now. So, yeah, hopefully that helps answer your questions, NJ. And if you have more, right? I mean, if you have more questions or we didn't answer your question good enough, you can go ahead and email us. Just on the left, you can see that the email investors@overlandcorp.com. Go ahead and send us an email. We're happy to talk. So moving on, Sandra, what would be your opinion on flipping houses during these times?
uh, I have a bunch of investors that and people that I've taught in investing classes that have done extremely well with flipping houses. Uh, my general impression of flipping houses is uh, uh, it's more of a business than it is an investment strategy, because to get good at it, you have to be basically full time at it. It's a pretty tough business to be part time. It worked really well when there were a ton of short sales out there. Not so much these days. The market has been really picked over for those types of assets, and so I think you really need to know what you're doing. I frankly do several hard money loans to home flippers, and have done really well on the investing side of that, with providing capital for those. Uh, but and we manage a bunch of homes for investors, and the homes for the most part have been doing really well, uh, getting decent returns, and they're good. What I see a lot of times is somebody will buy 2 or 3 or 4 homes, and then they get tired of dealing with the tenants and all of that, and then they want to move into the next category. And I've seen a lot of people 1031 out of their smaller single family home duplex, fourplex concept into some of the larger investment products that we offer.
All right, we're gonna keep this moving. So appreciate all of you who have been out here for the long haul. We're gonna try and get to all of these. So we'll do our best. If we run out of time, we'll end it off and we'll try and email you specifically your answer. But we'll keep going through here. So Henry is asking, what are you seeing in cap rate changes across asset types that you own?
Usually, Henry, as everybody knows, you calculate a cap rate by taking the net operating income, which is before debt service, and that's income less expenses, and divide that NOI by the sale price. So if you're not selling many assets, you're not seeing what those cap rates are. But I have seen two things happen. They both kind of are a little counterintuitive. On certain asset classes, I've seen cap rates going up, and other asset classes, I've seen them stay fairly stable. I'm even thinking that with interest rates going down, we may see some cap rates in certain property types going down. So that's a really general answer to your specific question. I usually use on the acquisition side, if I'm buying an income producing property, I try to get around a 7 or 8 cap. Apartments are tough to get at that. They're usually more in the 5 to 6 range.
Yeah, we've even been seeing them in 4s lately.
Yeah, I know some of them are down that low, but
okay.
Anyway.
Thanks, Ken. So Peter, I'm going to go ahead and answer this one. Will a recording of this webinar be made available? The answer is yes. So you will get an email with this recording, Peter. And if you need to look at it or you need to send someone else to it, you can just go to overlandcapitalcorp.com. So that's that website that's at the very bottom left of your screen right now. You can go there. You can see all our current webinars. You can see past webinars. You can see articles that have been written. You can see projects. I mean, you can see really everything there. So go ahead and visit that site. Moving on. Henry, my man, I love the questions. So will Overland look into other assets such as medical offices, data centers, cell towers, or other sectors?
So the broad answer to that is yes, but I think any company that's trying to brand itself like we are, you want to be careful that you're just not all over the board investing in every different property type that exists out there. I think you've got to be known as an expert in certain property classes. So we're careful not to branch out unless we get a really, really good opportunity that we think makes sense for our investors. This cell tower idea, we're working with AT&T and another company out of Ohio on a cell tower right now, but it's more us cooperating with everybody on a lease where they're paying us money for a cell tower location rather than the other way around. But yeah, I like medical office. I like data centers. It just depends on who you're talking to and about. And so yeah.
I think that's a really good point. I mean, I just kind of want to reiterate, right? I mean, you pivot when you have to, but you pivot very calculated, I think is a good way to say that, right?
Too. Yeah.
So it's easy if you just start investing in every single thing that comes by. You find yourself in a position where you could potentially be a jack of all trades and a master of none. I mean, one of the one of the main things when you're doing real estate investing, right, is you're usually relying on someone else. And when you're relying on someone else, I mean, one of the big things that they provide is just the foreknowledge, right? The
Yeah,
ability to anticipate things that are coming up because they've been there and they've done that. And so yeah, I think it's very, you need to be very calculated. We're always looking at other assets, but when we move to other assets, it's a very calculated move.
yeah, exactly.
So, okay, Henry, with one more questions, when will you plan on more acquisitions?
Henry, I'm I'm buying one. I'm putting an offer on one property today that I absolutely love. I talked to the owner at length yesterday, and I'm pretty excited about it.
Is that
I
a
think
development or is that an
that
acquisition of an
that
existing?
is a new development. I track Henry about 15 markets, and I have probably during this downturn looked at well over 200 uh, sites, opportunities to try and find the one that I want. And I found one. I'm pretty excited about it, and we can let you know in a week or two how we're doing. But I yeah, I do plan on more acquisitions.
Cool. All right, moving on. So, Zach, have you ever invested in an ISP or WISP or fiber to the home company, internet service provider? And if so, how did it do?
Uh, the answer, Zach, probably will not be to your liking. It's no, no, and no.
Sorry,
So
Zach. Yeah, it sounds like that's not something that we've ever really done.
we have not. But
Uh,
if if you do it and it works well, come and talk to us about it. We're always interested in opportunities that might be good for our investors, but we're also very careful about moving into areas that we don't know much about.
yeah. I'm sorry. I'm looking at this next question from Peter, and Peter, you and I need to be friends. So so Peter asked, how can we help Overland be successful? Uh, Peter, I don't know who you are off the top of my head, but we need to talk. So no, I mean, in all seriousness, really, the I mean, if you want to help, watch the webinars, right, and sign up for the. You're gonna get some emails after this. Sign up
Well,
for the investor portal,
yeah,
right?
I can also add a little bit to that. Uh, Peter, the lifeblood of any really good real estate development company is equity capital. So uh, one of the reasons we do these webinars, and we're always reaching out to investors to build our database. The more good, qualified, accredited investors we have, the better we like it. So if you want to help us be successful, get us accredited investors. We
Well,
love working with them, and we think we're good at it. So
and Peter, appreciate all the contact information. We will be reaching out. Don't you worry. Um, so speaking of that, side note, Natalie, will you write that down? Thank you. Um, so next question from Sweely. Will Overland look into investing in manufacturing facilities in view of our over dependence on China for our essential goods?
Sweetie, the answer to that is absolutely yes. It's a market that we need to spend more time at and be involved with. But it's, I guess it's a twofold answer in part. One, we know that they're going to be bringing back manufacturing, and there's no doubt that's going to happen. So uh, we'd like to be a part of that because those companies that are doing that are usually cash rich, and they make absolutely great tenants for your projects. So yes, on that front. And the other side of that is companies like Amazon, and just there are a myriad of companies these days that do online sales and marketing, and they all have to have central locations where they bring in their products and then distribute them out to the market. So those are two categories that we're seriously looking at.
Perfect. So looks like this is the last question. Do you see construction cost coming down? And let me, if you don't mind, Ken, I can jump in
Sure,
on this. I've been
sure.
looking at this. So we have a quite a decent number of projects under construction right now, and construction so far and in most areas has been considered an essential business, and we haven't really seen construction in a lot of areas slowing down too much. Not to say in some areas it hasn't, because it definitely has, but in a lot of the areas that we're in, our construction has been going actually phenomenally well. Um, and so the short answer is well, the right answer is maybe. It depends, right? But but in the
Way to be
immediate,
definitive, Mike.
I know, right? So, and the reason I say it depends is in the immediate, no. I mean, construction has still been booming. And now, if if a recession happens, if COVID-19, takes a big jump and it really starts affecting the construction industry, then yeah, I mean, I think inevitably we'll see construction costs coming down. Just to date, we haven't quite seen that sector
Yeah.
get ultimately affected, at least in the areas that we've invested in.
But here's
Anything
how
to add,
that
Ken?
yeah, here's how that always happens. I've seen it over and over again. If if the construction material supplier industry can raise prices and think they can get away with it, they will raise it as much and as fast and aggressively as they can. And if they don't think they can do it, they'll hold off or they will absolutely drop prices. So I've seen them work that magic on more than one occasion. And and so I think we're kind of in a little bit of a limbo pattern right now. I don't think you're going to see construction costs going up. You may see them begin to come down a bit, but but yeah, when the markets are booming, they're taking advantage of you every way they can. And then when the markets aren't, they're begging you to buy their products. So
Yeah. Well, and like I said, it's just the construction industry. If you took that in a vacuum, it hasn't, like I said, at least in the areas that we're in, hasn't been substantially affected. Um, and so that's why you're not seeing those materials come down in those areas right now. Okay. Well, that was a longer one. We appreciate all of you who held on till the very end. I hope this was informative. I hope you learned some things. Um, and like I said, if you had a chance, fill out the poll, reach out to us, connect with us. You're going to be seeing emails for the investor portal. Sign up for the investor portal. I mean, if you are interested in investing with us, that's how you get priority. People who have signed up there get a priority over the general public. So but feel free to reach out if you have any other questions, and we appreciate all of you spending your time with us this afternoon. Thanks, everyone.
thanks, Mike.